Wall Street coming off a record week. If you look at the futures this morning, they're pulling back a little bit. Actually, the Dow futures are down by almost 200 points right now. S&P futures off by 20, the NASDAQ down by 53. And joining us right now is David Lebovitz. He's global market strategist at JP Morgan Asset Management. David, I'd ask you why you think the futures are down, but it seems kind of silly to think that the futures will climb to the sky every single day, given the gains that we've been seeing. What is the overwhelming theme as we kind of get into this year? Is it stimulus, or do you think the concern of higher taxes eventually will take over?
So I think in the near term, all eyes remain firmly focused on the outlook for policy, both monetary and fiscal. And so, with the Democrats taking both seats in the Georgia election last week, it does look like we're going to get more fiscal stimulus than expected this year. It does look like it's going to materialize sooner than expected as well. And so I think a lot of what you've seen in markets, both interest rate markets as well as equity markets over the course of the past week, is really a continuation of that reflation trade and a lot of optimism bubbling up around the potential for the economy to come back online this year. I think that there is a firm expectation that the second half of this year will be pretty good, and that's what you're seeing in terms of equities over the past couple of days.
Right now, financials are your top pick, and I get it. If you're looking at stimulus right now, that's going to mean that you're looking at a lot fewer bad loans that will coming through, maybe not as much damage that's done to the economy as there might have been otherwise. But you also have to look at higher rates. Why do you think rates have been ticking higher?
So I think rates are moving higher really for two reasons. And a lot of the move that we've seen in rates has been driven by an increase in inflation expectations. And so effectively what you're seeing here is markets price in, again, a more robust rate of economic growth, an economy which is going to run a bit hotter than I think a lot of people expected. And as a result, inflation ebbing higher. Now, do I necessarily think inflation is going to get out of control? No. And I think that if it were to begin to seem like inflation was taking off, the Fed would respond, and that could certainly undermine risk assets more broadly. But, at the current juncture, I think that this is a very healthy indication. And you see, again, break-evens nearing their highest level in 6 years, reflecting that optimism around the economy over the course of the coming 12 months. And so, I think the beginning of the story around financials has really been about higher rates and a steeper curve. We know that that's good for bank profitability. I do think that narrative can evolve, though. And as banks are able to begin increasing dividends again, as buyback programs are able to come more fully back online, there's also a yield component to all of this that we think a lot of investors will grapple or gravitate to, particularly in a world where interest rates remain historically low.
How much of the inflation picture do you think is because of a weakening dollar? As we talk about spending more and more and running up the deficit, and then the Fed continuing to print, too?
So a weaker dollar is definitely part of it. I think that there's a broader narrative here around the issue of our twin deficits in this country, obviously the federal budget deficit and then the trade deficit as well. I think that the weaker dollar, it's kind of a convenient way to explain some of this increase in inflation expectations. As a percentage of GDP, we don't really import enough stuff for a weaker dollar in and of itself to be the sole driver of higher inflation. But the combination, again, of that weaker dollar, those twin deficits, and really the idea that there's so much pent-up demand for services and experiences, and that demand should be realized later on this year, all of these forces have effectively come together and are boosting the view on inflation. And, I think it's important to recognize that in the background, there are still all of these structural forces, things like demographics, income inequality, technological adoption, which will weigh on inflation structurally over the long term. But in terms of the next 12 to 18 months, we do envision a world where inflation hopefully begins to run a bit hotter, certainly than what we saw over the course of the prior expansion.
Shepard Smith here. Thanks for watching CNBC on YouTube.